All right. Welcome, welcome, welcome. We've got Mon Valley water, a tin, and we got $114,000 Bitcoin, roughly. And I am coming in. I've been just doing a bunch of random content production, talking to people, paying attention to markets, but I haven't gone through in the last couple of days and really broken down kind of how I, normally look over my market. So what I'm going to do now is, having not looked really at all today, generally have a feel of how everything's going, but we're going to go down kind of how I approach looking at my trading view and trying to gather a sense of where we are currently. So let's do that. Let's bring up the charts. First thing I always do is start off with the big boy, the S&P 500. Bull market, am I right? Bull market, we are still at or near kind of all-time highs. We have had a little bit of a scare in the past few days. We are coming into Jackson Hole, and as you know, lately, as we come into some sort of big inflection point, people have been de-risking, especially when all-time highs, and we're seeing a little bit of that volatility, especially because vol had been compressed all the way down into like the 14 in the VIX, getting towards really super lows in the bond volatility index. Things had just been chilling on rates, at least here, not so much maybe in other parts of the world. But you could argue, and there were some people out there that made a great point of this, Tyler Neville being one of them, that, vol was compressed and it might be time to, if you're on sides, peel a little bit off or buy some downside protection. That was prescient. Brent Johnson also kind of hopped on a Blockworks podcast and was saying he was seeing a lot of things that were not looking great, a lot of confluence to the downside. So here we are. Jackson Hole is Friday. A little bit of guidance seems to be coming out prior to that, in which a lot of people think, a lot weighs on this speech or whatever we're going to call this. And to be honest, so many people are focusing on it that I just think we're going to get through here. I think it's going to be a nothing burger. Maybe some people have some good points and we'll move on. And I think we'll go back to bidding everything just as we've done in a lot of these other events. So unless something drastic changes, I expect to see these kind of levels hold in risk assets. We've already pulled back a significant amount in Bitcoin. I'll bring that up. But we have pulled back into kind of the breakout support area, the 112 to 114. We are below the 20 or 50-day moving average. So that's not like all that great, but I'm constructive here. If we go below like 110 or something like that, then I worry we go all the way down to like maybe the 200-day moving average. So kind of hoping Jackson Hole just kind of, we get through that, people start putting on risk again, and we're back to bull market tings. Bull market tings, man. That's what I'm looking for. Gold. I'm getting rid of this here. Gold looking strong. I mean, this thing is just consolidating. I just think this thing, I think we see it rip. I mean, I just think we haven't seen the end of gold. I think it's just going to rip again. Wow. I had no real recollection of it just being in such a small range here for the last, how far is this at this point? 84 days, so 3 months of just consolidation right near the highs. That'll be interesting to see which way that plays out in gold. So NASDAQ, let's check that out. Pulled right down to its 50-day moving average. Interesting. Bounced off that pretty well. Russell has had its days, has some rotation days, but otherwise looking okay. So in the end, like, my first read on all this is like, we're pricing in a little bit of uncertainty, pricing in a little bit of hawkishness. And in the end, we're pulling back across the board after a long run to the upside. So honestly, nothing shocking, right? Your total crypto market cap broke out, fake breakout to the upside, retesting the 50-day there. I want to see that continue. I'll put a little price alert. Bond volatility index, that bounced off a little bit too, but nothing crazy. VIX, we've seen a little bit of a move up today, but that has gotten let's see here, that has gotten kind of slammed back down as well. So I think we just chill here for the rest of the weekend to Jackson Hole Friday morning, and things look good. Now, if you haven't been paying attention to, well, there's also been some geopolitical stuff, I guess, the whole meeting with Europeans, meeting with Russia, trying to get this lady to step down from the Fed governors, as Trump and his administration try to get a little bit more of a stronghold in the voting power here moving forward for rates. So that's always, up in the air. Powell, Trump, the whole gambit. But, there was also some MSTR, if you guys pay attention to strategy. There's a lot of FUD that kind of came out from this week, in which they provided a forward guidance at their last earnings call about 3 weeks ago, and then they basically pivoted away from that. Not really, but like they made an important caveat that was basically like they had said they were going to do one thing, and then they basically said, well, we are, but unless this happens, then we'll go back to doing the same thing we did before. A lot of people lost some. You're seeing the importance of like narrative building and people with influence, like being able to kind of create a shitstorm of FUD from little things that might have not have become such a big deal a while back. The power of information moving across social media is like very impressive. This became a huge deal. We saw a massive down day in there. And even in their preferreds, where they've kind of shifted their business to these yield products, they had a lot of confluence to the downside. So they had the ex-dividend date for certain products like Stretch on the 15th. And then you had the guidance alteration on Monday. Then you had yields in interest rates going up, and Bitcoin going down, which created a little bit more uncertainty and credit risk to Bitcoin-backed preferreds. All of that causing all the preferreds to sell off more than you might think they would. I personally think that's like a great buying opportunity. I bought some Stretch yesterday on the lows. However, I've learned a lot about those, and I understand that there is quite a lot of duration risk in those, especially in like a highly uncertain rates environment. So that's interesting. I'll go kind of look at some of the pairs that I like to look at as per usual, see if there's anything really interesting that's changed. Not a great looking Bitcoin SPX chart, although this is the 4-hour. I can back this out a little bit, see if we're still looking good here. On the weekly, I would say we're still in like a kind of bullish environment overall. Bitcoin in the Qs, same thing, kind of retesting the break again. Still looks good to me. It's interesting to see what happens here with all of the MSTR FUD. If we're going to break down, an IBIT will be like a better way to hold your Bitcoin exposure. Bitcoin volatility in general still is struggling to get anywhere above 40. Upside, downside, all of it. Really interesting to watch. So that's about it. Everything looks kind of like we're slowing down into the kind of inflection point here at Jackson Hole. And then I'm sure we will see, that's Friday morning early. So I think we'll see, my base case will be a pretty big Friday rally once we get past, the midday session, maybe the European session. Unless there's a big change from what Powell has to say, and it's very terrible, So otherwise, things look good. We will check back in every couple of days. I like to do this and really get my head on a swivel. But in the end, I lean bullish here. I think we have sticky inflation. I think we have good inflation. I think jobs are fine. I think we have a kind of inflationary break to the upside, to the point where everybody is going to get suckered back into all risk assets, and then we'll have a moment of panic after that. But that is down the road right now. I think we're bullish for constructive, no recession, fucking pedal to the metal, baby. Okay, I'm out of here.